Hi, I'm Josh Malancuk, President and CEO of JM Tax Advocates. I'm here to present how to qualify senior care operators for COVID property tax relief by managing to avoid unexpected property tax increases in these uncertain times. So it's important not to forget about property taxes because of the propensity for large-scale increases from tax rate changes. And so we'll talk about that with the context of how to avoid these unexpected surprises through planning strategies. So here we've got an example where you have a level assessment that dates back to the 2018 assessment year. And so, it's commonly known that while many businesses are facing unexpected costs and expenses these days because of COVID, the government is not immune to facing similar increases with their operating expenses. And so the difference there is that much of the expenses will actually roll into the property tax levy. And so if there's a large scale increase in expenses from the government, especially local government and sometimes state government, you will likely see a tax rate increase because of the additional funding requirements. And so, dating back to 2018, you're seeing a level assessment of $15 million. Your annual property tax bill for your assisted living facility is $345,000. 2019, based upon the payment in arrears in 2020 payments, you're seeing the same amount. And then starting next year, even though the assessment did not change for that assisted living facility, you are going to see on this example a 30% increase for a $105,000 additional payment on an ongoing basis because of the sheer property tax rate change from all of these expenses that are now rolling in. And so it's likely that once you receive the tax bill in next year, you will be well past the assessment protest period to head any of these increases off at the pass. So it's important to make sure that your assessment is fair, accurate, and equitable. Because doing so will have an opportunity cost that's much greater than in years past. And actually, during business decline periods, such as the COVID-related recession, there may be some relief warranted through assessed value reductions because of economic obsolescence that can be documented. And so we'll get into that later in this presentation. But, there's been winners and losers with this COVID recession. But in general, businesses that are facing large scale revenue, utilization, occupancy declines, and increases in expense line items for doing business likely will have COVID-related property tax relief opportunities going into this year. And, it's important to understand that the government is not going to do a study for COVID property tax relief for your business. And so it's really incumbent on you to either internally develop a credible argument and business case for COVID relief, or to bring in an experienced navigator who understands how to build that case and quantify and document a credible analysis. So it's likely that the process will start out with a protest and kind of work through with support and advocacy at hearings. So you got to know what you're getting yourself into when you file an appeal and kind of how that process works. So, but the first step is to understand, well, do I qualify for relief related to COVID? So some questions that we would use to kind of consider whether a business could qualify would be to look at the company's sales revenue. How has my sales revenue changed over the past year? What are my expense line items doing, over the past years? Has my utilization with occupancy been impacted, and why? Am I in layoff mode? Have I had to deal with headcount reductions? And what's happening with my supply chain? So am I able to bring in my medical supplies quickly to address my occupancy needs at my senior care property? And are my costs going up related to those key supplies? And am I having to incur more money for additional supplies, like for safety PPE? It's commonly known through several reputable resources that the cost of maintaining care for a senior care operator has increased dramatically and will continue to face increases going forward, despite COVID infection or not. The expenses are projected to go way up starting this year and going into next. So the other item to understand is that labor costs are going up for these facilities. The occupancy is being impacted because new residents are largely not being accepted. And so the impact by COVID to the senior care living industry is expected to be $40 to $50 billion over the next year. And so all of those factors scream COVID property tax relief. And so many senior care properties will qualify for COVID-related relief. And so the second step involves actually building your case and measuring the impact of your obsolescence case through qualitative and quantitative analysis, and in largely using common appraisal methods for real and personal property valuation. And so what we typically will do is really look at the income approach, build an income approach based upon kind of what the market occupancy, revenue, and expenses have been doing. And then we'll derive our cap rates from recent sales of that property type to, again, measure the impact loss on value for senior care property. And we expect declining values for reality going forward into this year. And so, just looking at property taxes, I mean, many accountants will just kind of assume that property taxes cannot be changed, influenced. Maybe they'll just see it as a sunk cost to pay every year. Well, here's some examples of where a senior care property operator got serious about managing their property taxes and lowered their property taxes by considerable amounts. And so the first example is a portfolio review of about 24 plus senior care properties, and just looking at the assessed value impact, they were able to save $2.55 million over the term of our review. The second example is with an independent living portfolio, and they saw on one of their property tax assessments a $127,000 savings over a 2-year period of time. And then the third is an example of an ongoing perpetuating savings that was secured for a skilled nursing facility who reviewed their property classification, and so we were involved with saving them about $50,000 a year with amounts that should perpetuate every year. And so the most important concept that I want to convey to you today is that bringing in experience can have a dramatic impact on whether you qualify and secure relief. And then secondly, how much that relief is. And so bringing in the experience can make a big bottom line difference with these tax appeals. And so we're here to help. So starting early is an important concept. You know, many of the appeal periods will crop up right around the second quarter of each year, probably right around April or so. So mapping these out as part of reviewing your portfolios is a great first step. And then taking some actions to do the analysis and build the case ahead of the appeal periods can make a big difference with gaining early relief at your local assessor level, so that you can avoid years and years of pending appeals at the state. It's important to understand that missing your actual protest deadline will disqualify you for relief for the current year. And then you'll be going back to the well the following year with a new business case. Creating that credible analysis and looking at building support for what is equitable, fair, and accurate for the assessment is really the central piece for negotiations when you're dealing with local and state government. And so bringing in the experienced navigator can really save you a lot of time and pay big dividends when you're talking about resolving these tax appeals in your favor. So, you know, at this point, we've talked about some ways to identify whether you qualify for COVID property tax relief for your senior care property, some ways or techniques that you would use to quantify and qualify your property as part of building a case through tax appeals and advocacy. And we've highlighted the importance of bringing in a seasoned navigator that can help accelerate your relief plan. And so, you know, we're here to help with our team at JM Tax Advocates. We've listed our contact information here. So feel free to call on us so that we can learn more about your business and provide an initial consultation for no charge to help you identify whether you should be taking some time-sensitive actions for relief for your senior care property.
Find out why leading companies trust JM Tax Advocates to bring their property taxes back to reality. Get your free evaluation today.